Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back through daily crypto news and analysis, and today we're going to be talking about Hedera or Hbar. So sit back, relax, and before we fully jump on into this video, I just want to ask you guys, could please leave a like on this video. It does help the channel grow immensely, and I do greatly appreciate it. Now with that being said, the market is doing a little bit of a roller coaster volatile ride today, as we pretty much expected even yesterday. I am waiting for us to actually go a little bit lower if you guys did watch my XRP video from earlier. But overall, I'm not too concerned with the price action lately. I've been waiting for, pretty much HBAR down at like 27 cents. Just recently, as you guys do see, we hit about almost 27.5 cents. I'm waiting for 27 cents exact, but overall, we don't need to go that low. I haven't looked at the chart in some time, but if we go over to the HBAR chart, we can pretty much see where that specific level actually stands at. I know it's not 27 cents exact, but it is around that point. So here we go. So it's actually about 27.3, almost 27.5 cents, realistically speaking. You can almost see that we, target that almost, exactly. RSI still looks pretty bad here. Volume still looks pretty rough. If we do break this point, though, I'm just saying it right now, prepare for a little bit more of a volatile ride. We could even go down a little bit lower. I'm hoping that this holds, to be honest with you guys. Even if it comes down just slightly to pretty much bottom out on the support zones going all the way back to, September, I'm totally fine with that, which is almost 27 cents exact. Now, we could have slight wicks. For example, we had a wick back here to 22 cents, but 27 cents was the strong support zone. If we have those wicks, have your buy zone set up. Maybe you could have a buy at, 24 cents, for example, because 24 cents around this area here is fairly strong. Or you could even try to, wedge your bets and say, let's go down to almost 22 cents or 21.5 cents, somewhere around this point here. But with that in mind, yeah, I'm not too worried about the price action. I wouldn't be worried about the price action if I was you guys either, especially if you guys have been holding for a fairly long time. I always go back to stuff like this, right? If you hold HBAR long term, it doesn't matter how many TA videos you watch about short-term PA, the result will be the same. You will be much wealthier in the future than you are now. I believe we will see a lot of use cases going live in 2022. Very excited. And I am very excited for this, and I do see the same thing. I mean, I don't really, frustrate myself by looking at the chart all day. I don't look at the chart and I say, well, we're still at the same prices as going all the way back to September, or even going all the way back as far as, even March of this year. And I don't compare it to other assets like Solana that have done significant rides to the top or anything like that. I know what I hold. I also know that 2022, when we're talking about the key roles that are going to play for crypto adoption and crypto assets to really kind of start to move in price, we know that speed, scaling, regulation is all going to play a key role in 2022. I do 100% believe that crypto is on its way to the big leagues. And when I say that I say that, these major utility tokens like HBAR, XRP, XLM, QNT, all of these major assets I talk to you guys about on a day-to-day basis. And of course, there's others that I don't talk to you guys about. Like, for example, IOTA. I don't talk to you guys about, Algorand a lot either. I've done videos on it, but I don't talk about it a lot. A lot of these assets are set for mass disruption. We even see here, he said more transparency would solve 80% of the problems while allowing stablecoins to thrive onshore. We know that transparency is a big problem. We know that anti-money laundering, know your customer, is a big issue in this space as well. We know that when we're talking about the major progress that we need to make in crypto, it all comes down to the wire of, first off, security, transparency, efficiency, aka scaling and speeds, as well as settlement times. And we know that Hedera is really kind of providing a massive amount of all of those key specific things that major financial institutions, banks, governments, anybody will be pretty much looking forward to seeing. We even see here, secondly, while crypto users number somewhere around 200 million, punching away above their weight, more blockchain network effects are needed to achieve wider mainstream adoption. And this is the case. Crypto is growing at a massive rate. We've seen, Solana, which is, I think, the number 5 asset right now, go down multiple times due to mass adoption. And it's only going to grow and grow and grow. Even right here, FTX is leading the charge. It doubled its user count in the fourth quarter. So crypto adoption is here. Crypto acceptance is here. We're only at 200 million users, which tells me we're still extremely early. And we know that FTX itself is valued at about $25 billion. All of these exchanges are going to continue to grow. And we even see here, SBF explained that while smart contracts have paved the way for metaverses, decentralized finance, and Web 3.0 developments, video games could be the path to massive scaling. Tapping into the existing user base of video games could be huge, billions of users and hundreds of billions of dollars each year. And that is the truth. I mean, when we're talking more so about all of these major assets and we're talking about all of these major, companies in this space, a lot of them are a little bit of a joke. We see false promises being made. But Hedera, is probably one of the most legitimate, I would say companies in the space that have been providing us those updates, providing us the substance that we really kind of have been waiting for. They haven't really gave us any false promises. And finally, cryptocurrency transactions must change gears. Levels of 50,000 transactions per second are not enough to satisfy industrial scale applications. Without high speeds, the other two issues cannot execute well. I always laugh when a blockchain says they're already fast. None are. Fast means millions of transactions per second. No one is there yet. And we know that Hedera is going to pretty much achieve unlimited transactions per second once sharding is in place. That is why I do believe that 2022 is definitely going to be a key year for Hedera. We've also been seeing a lot of things unfold that could probably lead us back to Hedera, but I'm not going to try to make this case. But I'm just saying a lot of things are unfolding within the digital scene with CBDCs and even the banking scene. HSBC and IBM plan to replace cash with their new digital currency. So, they want to replace cash. They want to get rid of paper cash, which is totally fine. I understand that, whatever. But I do think that, cash is still going to be around. I think cash is still going to be a big player as well. But we do see here, the two companies have already filed additional pending patents to accompany their CBDC, which are a platform to simultaneously transact and clear multiple currencies across multiple chains. Blockchain technology with automated issuance of digital assets / tokens via smart contracts, application of smart contracts for FX transactions, a blockchain platform to simultaneously clear and settle OTC Forex trades as well. Now, I'm not saying that this is for example, Hedera Hashgraph or anything like that, but we do see here the system has the potential to simplify and speed up interbank cross-border payments, which we know they pretty much jumped into the cross-border payment scene, Hedera has, and I wouldn't be surprised if this did lead us back to Hedera, IBM being a leading GC member of Hedera's, and we do see here the successful adoption of distributed ledgers in this proof of concept demonstrates how fintech companies like IBM are helping financial institutions improve existing procedures and explore new ways to conduct business. And they are talking more so about Accenture and stuff. And where this leads me to is, the Interwork Alliance, which we know Accenture is already on. We know IBM's on. I don't know about HSBC. I can't confirm HSBC, but we know that there is a ton of big players on the board of, the Interwork Alliance. And this is all talking more so about tokenization. Tokenized distributed applications that exchange and use anything of value can disrupt global economies. Tokenization is definitely going to be a huge player here, and they are talking about DLTs for the finance industry, an industry approach, no more paper, tokenizing bills of lading for shipping as well. This is simplifying the digital interchange of value, the Interwork Alliance. The best part about this is we go back to June 9th, Hedera Hashgraph and application partners collaborate with the Interwork Alliance on sustainability working group key initiatives. This is all talking more so about pretty much getting into tokenization, pretty much changing the entire way of carbon credits. That's pretty much what they are really kind of looking at, tokenization of key elements for carbon credits, including, contractual extensions, workflows, and analytics for creating a standards-based ecological market. And this goes hand in hand with what I've been talking to you guys about for a fairly long time. Hedera has a massive amount of tokenized, products on the scene already. We talk more so about Suku, we talk about Rectify, Dovu, Envision Blockchain, EDF. All of this goes hand in hand with what I've always been saying about, tokenization. A $24 trillion market at scale, okay? And all of a sudden we have this, which this white paper is an important piece of work that will help standardize the ways businesses deliver. Wow, I couldn't even talk. Anticipated voluntary, ecological market tokenization benefits to the ecosystem. So they are creating the standard for tokenization. Okay. Now, the best part about this is, like I said, Swift getting into this, they are already projecting $24 trillion for tokenization in general by 2027. And we know that asset tokenization on Hedera has been growing and growing and growing. We even see over here, the Hedera token service enables the configuration, minting, and management of fungible and non-fungible tokens on Hedera with ease and without needing to deploy a smart contract. Custom fees are fast, fair, and secure as HBAR and cost less than 1 cent USD to transfer. That's exactly why this is going to be so massive. And we know that this is going to be, huge, in terms of what could be tokenized, what will be tokenized, and how much of it will be tokenized. But I do think that Hedera is going to be the leading racehorse here. There's 500 plus teams building on Hedera already. Most of them are already focused on the tokenization scene. And this is why you should be tokenizing on Hedera. This is pretty much the benefits of that. We've gone over this multiple times. But when we're talking about just a few of the markets that will be tokenized, Swift is saying 24 trillion by 2027. That's fine. That's bare minimum to me. And even if we do grasp 10% of that market, we'd be worth about $129.90 per HBAR, or currently a 453x. And you might be wondering, well, by 2027, say for so, we have, say for so we have 25 billion in circulating supply. Say for so we do half, we'd still be worth almost $100 per HBAR, or a 335x. This is what I'm talking about, though. I know that you could call this hopium, you could call it whatever you want. Realistically speaking, when we're talking about tokenization, I know that Hedera is going to be the leading racehorse, because everything that goes hand in hand, HBAR is really kind of trying to solve. If you don't believe that HBAR will essentially achieve unlimited transactions per second, we talk more so. I've talked to you guys about shorting so many times. They're at 10K transactions per second currently. It's throttled at that. In the future, this is going to allow for unlimited transactions per second. This is why my main bet is on Hedera, because not only are they asynchronous Byzantine fault tolerant, they are also leading the way for a lot of these global standards in tokenization. When we're talking about the key roles here, speed, scaling, and regulation are a key role. We know that Hedera has the speed. We know that they have the scaling options. Just running one shard allows them to achieve 500,000 transactions per second. Lehman himself said that he doesn't want to do that because it does create issues with security on the network. So until they do have a lot of those nodes running and stuff like that, then they will implement sharding. And I do believe that that is probably going to happen in 2022. If that does happen, we know that, Hedera has been 100% pretty much compliant. We know that there could be issues with that, but I don't think that Hedera is, not compliant. I know that they have some major, pretty much meetings with the SEC here and there. We've talked about that as well, but regulations are definitely coming into the space. And I do believe that Hedera grasping just 10% of that tokenization market, and I know that it's probably going to be worth way more than $24 trillion, because even real estate by itself, if that gets tokenized, you're looking at almost a $70 trillion market by itself just being tokenized. And that's going to happen. We're seeing tokenization move very fast. MasterCard teams with Google Pay in India to drive tokenization for card payments. This is happening right now. We even see here, America needs to keep pace with tokenization. Former SEC Chairman Jerome Powell said, or Jay Clayton said, sorry. Jay Clayton said that the U.S. needs to act fast in asset tokenization. China is already racing ahead with tokenized payments. Dollar-pegged stablecoins already give America the advantage. Tokenization is going to be adopted in at a massive rate. And I want to warn you guys ahead of time, because I know that focusing right now on the price of HBAR currently is a focus point for a lot of individuals that want to get rich overnight, but that's not crypto. These are still investments. These are long-term investments. These are hedges against what is happening in the world right now, and I know we're focused more so on the prices of all these other assets. Year-to-date percentages, probably scare a lot of individuals. Wow, I could have made 44,000% gains on Gala. I could have made 16,000% gains on Axie Infinity. I get that. Do not focus on that. It's only going to frustrate you more. Know the technology behind something like Hedera, understand what they are trying to solve, understand what they are already solving, which is the trilemma of the blockchain issues, and that's where you could really see the value underlied there. They are creating a standard with Interwork Alliance. This is something to really look into, guys, because Interwork Alliance has massive connections to almost everyday life already, and tokenization is taken over at a massive rate, and like I said, 10% is definitely going to be, grasped by Hedera in the future. I just don't see it not being that, because when they are talking about the cost to mint, the cost, to transact, all of that goes hand in hand with what the retail individual is trying to adopt at. They don't want to adopt Ethereum. You, me, any normie individual is not going to be adopting Ethereum because the gas fees are astronomically way too high to transact over that network. We need something like Hedera. So with that in mind, I hope that you all enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, I hope that you all have a beautiful day or a beautiful night wherever you guys are in this world. That's been Nick. Peace out, guys.